Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Friday, 12th December, London Open. UK growth and Bank of England expectations are in focus. Risk appetite is carrying over from Wall Street's fresh highs, and gold and oil are reacting to a softer dollar and simmering geopolitics. In the UK, today's October GDP report is expected to show only a marginal uptick. Forecasters see a rebound in manufacturing as car output recovers from recent cyber disruptions, with oil and energy helping. But services, the engine of growth, likely flat and construction softer. That leaves fourth quarter momentum subdued and budget uncertainty lingering into year-end. Meanwhile, MPs have launched an inquiry into the Office for Budget Responsibilities Forecasting and Impartiality, and a government advisor is arguing that risk-averse regulation is holding back infrastructure and nuclear build-out. Policy debate is very much alive alongside the data. In the U.S., the dollar softened after the Federal Reserve's latest cut and Chair Powell's slightly dovish tone, even as officials kept their rate path intact and uprated growth. This morning, there's a modest dollar rebound, and the euro has eased from a 10-week high, with rate cut expectations still cushioning the downside. The yen remains on the back foot against the dollar and euro, though bets on a more hawkish Bank of Japan limit deeper losses. And in emerging markets, the Indian rupee has weakened to a record low versus the dollar amid the absence of a U.S.-India trade deal. Across Asia, equities traded higher after Wall Street's record close, keeping the tone constructive into Europe. Gold has backed off slightly, but is still near its highest level since late October, while prices in India dipped. Oil is firmer at the margin, with traders watching two geopolitical flashpoints. Thailand dissolved parliament as tensions with Cambodia flare, and there are fresh comments about a possible escalation in Venezuela, both keeping a cautious bid under crude. Turning to markets, that mix, steady risk appetite, a gently softer dollar, and geopolitics, leans supportive for equities and cyclical currencies, but puts a cap on dollar strength. It's also a recipe for consolidation in gold near recent highs, and for a measured, headline-sensitive tone in energy. Looking ahead, it's a data-light Friday beyond Europe. At 9 a.m. GMT, the UK releases GDP and industrial production, with consensus looking for a small monthly gain. Final inflation prints arrive for Germany, France, and Spain, unlikely to shift central bank thinking. The U.S. calendar is quiet, apart from a few Federal Reserve speakers. Into next week, the Bank of England decision looms, with markets pricing a high probability of a cut unless late-arriving jobs and inflation data surprise on the upside. What I'll be watching today: sterling against the dollar and the yen around the GDP release, looking for choppy two-way trade with a slight downside bias if growth underwhelms and cut expectations harden. I'll also watch the euro against the dollar to see if the pullback holds or fades, and the Aussie against the US dollar for signs the 3-week uptrend resumes as risk stays firm. Dollar-yen likely ranges, with any dollar bounce capped by Bank of Japan expectations. In emerging markets, the dollar versus the rupee remains in an uptrend, absent trade deal headlines. And in commodities, gold looks like a buy-the-dip market, while oil holds a geopolitical risk premium. In short, sentiment is constructive, but the balance between softening policy signals and twitchy geopolitics keeps markets optimistic, yet cautious. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.